detail. News of the day is probably the $1 trillion bailout. Yeah, $2 trillion bailout, and our biggest problem with it is it doesn't contain anything for commercial mortgages. And we'll talk about the importance of that in just a little bit here. All right, let me get my share going. Excellent. All right, I'm going to go through. I'm going to pay a few bills here. Guys, hang tight. Where are you watching from? Just curious. What city, and are you home? Are you at work? Are you home because you're supposed to be? Or are you home because you're forced to be? And hopefully everyone's healthy and everyone's family's doing fine. But love to know where you guys are calling in from. That'd be great. All right, guys. We're going to do this every day at noon until this stuff gets old and we see some semblance of normalcy here. But there are some interesting things going on every single day, and we're just sharing with you the stuff that we look at and that is shaping our decisions. Disclaimer: hey, we may talk about investments and securities and things like that. We're reaching a whole bunch of new people, so let me just say this really, really quick. This is not an offer of securities, even though we do have a Reg C, a 506C fund. We also have several 506Bs, as well as acquiring people for our general partnerships. But that is not what today is about. If we talk about it, it's just incidentally, and we'll give you an opportunity to talk to us about investing with us when we get through this set of decks here. Anything we talk about are syndications for education purposes only. That's pretty important. So today we're looking at SEC. So if we do look at SEC stuff, again, this is all the information we're talking about as accurate as possible. Everything is done with a ton of paperwork, so don't freak out. If you want to work with Mr. Texas Real Estate, text us at 281-401-9008. We are powered by Keller Williams Platinum. We have agents, and we're working today. We have a radio show on Monday through Friday at 9 p.m. to 11 p.m. It's on 1070 The Answer. Love to have you guys check us out there. We are on the air. We're running some best ofs, but I think, Jason, I can get back in the studio on Friday morning if you want to go and record a few shows.
Let's do it. We'll do it Friday morning.
Get this thing updated. The easiest way to stay on top of what we're talking about and what we're doing is to join us on our Facebook groups, Mr. Texas Real Estate, Jason Bible, and Robert Orfino. Again, there's 2 questions. Please answer. We want to know your email address, and we certainly want to know that you're not going to spam the group. We've had to kick out some wannabe loan officers in the last 3 days because they were not following the rules. Our big sponsor, speaking about loan officers, is Jet Lending. You guys got to check them out. They are lending. We've got, I think, 1, if not 2 deals with them. We currently have 3 payments going to them. So we have 3 active deals and 2 new ones coming up. Give Rob Trigg a call over there. Patent Title. If you guys are looking for a title company that works with investors, these are the guys that you want. We love the principal, Ashley. He's an attorney. He helps us out. And we know that he'll be able to provide great service for you guys. So MRTXRE at patenttitle.com. Quest, we just did the Trillionaire meetup last night. That was good. We had 180 or 190 or so folks online. That was very exciting for us. And we talked about Airbnbs. We talked about the marketplace. So make sure that you're following Quest. They all provide tons of information. And I think they're running some specials on setting up your IRAs. So now would be a good time to check those guys out. Capital Concepts. Check them out at forsmartmoney.com. You can email them at mrtxre@forsmartmoney.com. These guys work long-term, 5, 7, 10, 30-year loans. They also have fix and flip loans as well as regular mortgages. So check those guys out. They're very busy these days, but they'll make some time for you. Weimer's Insurance Group. Well, these guys are going nuts right now. They're working at home. They've got a lot of agents out there. You can guys give them an email, quotes@weimerinsurance.com, quotes@weimerinsurance.com. If you're asking, hey, was that changed yet recently? Yes, it was just changed. That's where they want the quotes come in. Let them know you're listening and you're following Mr. Texas Real Estate, and they'll work with you very closely and get you them the best rates possible. Houston Plans and Permits. Give Hugo and the ladies a shout over there, 281-372-1555. We're going to be using them on one of the add-ons that we're doing down in Edo. We're very excited about that. and you'll be seeing a lot of Facebook Lives once I get out of the house. My quarantine is up tomorrow. We do have an event coming up this weekend, Foundations for the Modern Real Estate Investor. Guys, it's $97. We're going to go over all the basics. We're going to talk about what you should be doing now over the next 9 to 12 months. Again, we're heavily into the buy and hold. We would not recommend anyone doing any flips, and we'll explain that. We would also have some target marketing for wholesalers. And Jason will go over that on Saturday, and I'll talk about your structure of your entities, your construction management, project management, getting some loans. So we'll do that Saturday and Sunday of this week. It's $97. It's online. It is the one that we pour everything into. We give you everything. So if you haven't signed up already, it's a great $97. So I added this slide from yesterday. I just want to let you know what we're doing, because I'm actually super busy. This is crazy how busy we are. But we're buying 4 flip to hold properties. 2 of them are apartments. One's a 9-unit, one's a 13-unit. The other one's a 3-unit and a duplex. So 2 will go into the American Fund, and the other 2 are for the syndication. We're making offers. We're in contact with our agents all the time. They're making offers on our behalf. We're finding us deals. We're working with our mastermind members. This is really exciting. We're starting a new syndication called In the Loop Syndication. And, like every other apartment syndication, it's got a pro forma that will hopefully yield 100% over 5 years. Double your money in 5 years. That's the basic apartment syndication MO, if you will. And, most people are pretty happy with 15, 18% on a long-term equity syndication. And, that's where that 15, 18% annualizes. So that's what we're shooting for, about 100%. But now we've got our mastermind members who are joining us in this syndication. Now they're getting the experience, and they're helping us do some fundraising. They're helping us do some legal stuff. They're helping us do some tax stuff. So they're getting a ton of experience so that when we do come out of it, they're going to be picking up more and more deals so they can start their own syndication. So within the mastermind, we've started teaching and working with folks that want to learn how to do syndications. We're renegotiating some deals that are in the pipeline, mostly for time. We're telling people that their deadlines that they've asked for, the sellers are just not reasonable. So we've renegotiated some of the stuff for time. We have 3 new rentals that we're leasing. We're just asking for the first 2 months. They've changed a little bit. We said, hey, there's this whole government thing. We'd really like the first 2 months. So that's what we're getting. We're working with investors on our Corpus Christi syndication, and we've gotten 3 new people in this week. So those people are very excited. Again, looking for that about 100% yield in 5 years, maybe less on that one. That one's moving along very, very well. Those are, and these 2 syndications that we do, guys, are all equity, meaning we don't, we prefer not to use debt or to take the debt position out very quickly as we raise money. Working with other investors to fund our American recovery. I think we put 3 people, Jason, through the accreditation process in the last 2 days. We were getting accredited.
They're not fans of that stock market thing?
No, they're not fans of the stock market thing. No, sir. And they're starting. We're starting general partners now in the office building, and I'm building out the syndication on the office building. I went through it with a guy who's been in commercial real estate for a very long time. Based on what we're trying to do, he was super impressed with the yield coming off that building. He tweaked the pro forma a little bit. We'll make those changes. I'll send it back. But I think we're going to have the Texas Real Estate Investment Center, Mr. Texas Real Estate, and all its affiliate companies. We'll probably have another. The way it's looking, Jason, is another about half of the bottom floor will go to individual real estate affiliates and associates, companies that are looking to just get in our building. And then really now the anchor is only going to be for the back half of the first floor, which is about 6,000, 8,000 square feet. So we are, we're in double-digit requests for space, quotes on it, want to know the amenities and want to know everything. And that was off of one announcement. So once we start listing this stuff out there, I think we're going to see a very big boom and a very big move into our building. So we're seeing a lot of success with that. Now this is not just for vendors. We also want to say in the office building, we're going to have a general cooperative workspace, which will charge, on a monthly fee or a 6-month fee or a yearly fee. We plan on having a follow-up room, which is basically a phone bank, so you guys can go in there and dial for dollars. We've got conference rooms, we've got printers, we've got education rooms, which we'll be doing a lot of education in there. There'll be lots and lots of people coming in, working with our folks. You have access to a Flex office. So if you need to take a meeting and see what office is available, schedule it. You can get in there, as well as having some assistance up there and getting some help. So this is perfect for the folks that are just starting off, some flippers, some wholesalers, some buy and hold folks that need a mailbox, need an office space, want to be around other individuals, want to be around lenders. And of course, as you might imagine, lenders and real estate brokers are the two most popular folks requesting space. So I imagine our center having at least 3 or 4 lending options and several brokers. So that's what we're working on. And it's super busy, and I'm keep adding things to my list, and I can barely take them off. So we're here today to do, give you an hour of what's going on in the marketplace, and we're very, very excited. If you're interested in investing with us in any way, shape, or form, just text us, 281-401-9008, text INVEST, and we'll make sure that Brian gets back to you. You can also email Brian at mrtx.com, or you can go to mrtx.com, go to the tab, invest with us, fill out the questionnaire. Whew. All right, Jason, I paid some bills there.
Okay. All right. While you were doing that, I'm sending emails here. All right. You want to hand the thing over to me here? Let's see. Okay. Zoom. Okay. The purpose of this webinar is to scare the snot out of you. Not really. It's really not. So let me go. I've got some good updates and some not so great ones. So let's just roll through this here. We're going to talk about what caused the crash. If you've been on this webinar before, you'll be familiar with this. We're going to talk about bailouts, inflation, the next crash, real estate, and our bold predictions. So again, this crash is not about the virus. The virus was the virus was the, I don't even want to call it the catalyst. The virus is what started it, really got the ball rolling. But really, it's all these companies borrowing all this debt with interest rates set by the Fed so they could buy back the company's stock so they could boost their compensation. That's all this crash is about. Too much debt, way too much debt. In fact, here's the chart I've been touting. I need to find a better one of these, but it succinctly shows the S&P 500 index in the green, the announced buybacks in blue. So every time there was a stock buyback, there was a new peak in the S&P 500, and that's been the case forever. So really, when people talk about, oh, I'm investing in the stock market because it's a great deal and these companies are worth so much more, they're really not, because all they're doing is just buying their own stock back. So they're really not producing a better product, a more profitable company, with lowered expenses and increased revenue. It's really just buying their own stuff back. And now everybody's getting a bailout. Everybody gets bailouts today, kids. Hey, Rob, have you figured out how much money are we getting? I don't know, maybe Rob went to go.
Nothing.
Oh, we're not getting anything, are we?
My wife might get a $1,200 check. Other than that, it's not covering the commercial loans, and maybe some of the management companies. Remember how we teach to set up the entities, which we keep telling everyone is really important. I think those entities might be able to qualify for stuff, and if we are, we'll take it.
Okay, so we may get some money for some of our other companies, but at the end of the day, we ain't getting anything. However, these bailouts are going to come with caveats, and really, these industries are going to become so absorbed by the federal government that they're just going to be an extension of the government. I mean, at the end of the day, really, what's the difference between this and China at this point? All China's companies are state-owned. It looks like a lot of our companies are going to become state-owned as well. And so this is, I was never worried about Bernie Sanders getting elected, but it's stuff like this that just gets floated out there that we need this big bailout for everybody. These industries are no longer going to exist if we don't do it, which is total and utter BS. So, but they're going to do it anyway. and the money printer go brrr. This is exactly what the Federal Reserve is doing. They're printing about 4 trillion right now, 4 trillion. The Congress and the executive branch are going to bring in another $2 trillion, which is $6 trillion monetary and fiscal policy for the bailout. Man, that's great. It worked so well last time. So it's going to work doubly well this time. And so what is the impact to your portfolio when money gets printed like this? And it's inflation. It's absolutely inflation. So the bottom line there is what the current government metric is for inflation. The blue line is the 1980 alternative CPI. So the problem with measuring inflation is it changes with every single administration, every single presidential administration. They change the metric in which should be measured. So these guys over at Shadow Stats, they just tracked the 1980 compared to the official government number, and they're saying it's about 10% before all the bailouts. So inflation is a coming. In fact, I'd argue that the vast majority of the gains in the stock market are not from companies becoming more profitable or even stock buybacks. I can make a pretty solid argument to say that most of the gains you've seen on the stock market is the devaluation of the dollar causing stocks to become more expensive. I really don't see there's that much value compared to the last run up. So this is my prediction. The next crash is actually going to be in the dollar. We're going to see a massive devaluation of the dollar. Everyone was screaming and hollering yesterday about, oh my gosh, it was the best point game ever. It was so awesome. It was great, 11%. Did you see how much the dollar fell yesterday? I'm just not buying it. Gold is going crazy right now. In fact, the next 6 months, gold is going to go absolutely bananas. It's going to be fun to watch. Just a reminder for all you folks, your number one job is to turn those financial assets into real assets. That is your number one job. Turn them into businesses and real estate. There's a reason, I can't remember the statistics, 80 or 90% of millionaires own businesses and real estate. They don't own stocks.
Yeah, Jason, explain that further to the layman.
So if you were to take all of the financial assets in the entire world, all of the derivatives, all of the ETFs, all the stocks, all the bonds, all the mutual funds, all of that stuff, all that paper stuff, and put it into one bucket, it would be worth zero. All financial assets are claims and counterclaims on real assets. They are going to be worth, they are worth zero. The only thing
how is that possible? I just looked at my TD Ameritrade account says I'm up 25% today.
Right, it says you're up 25%, but then what's the counterclaim to that? So if you the easiest way I can put this is, if you own $1, where does the value of that dollar come from? That dollar is owed to somebody else. You put all that stuff, it comes from a bond somewhere. It comes from the credit mark. Well, let's talk about credit for a second. This is how credit used to work. People who would save money would put their money in a bank, and then that bank would lend those dollars out as credit. However, what we've done now is with the Federal Reserve is we just print those dollars. So there's really no savers that are putting that money into a bank, into a financial system where that money is then being lent out. So your dollar is really just is just backed up by a dollar worth of debt that's owned by somebody else, which is
so all those people who thought, hey man, a year and a half ago, I have $500,000 in Boeing stock.
Yep.
Thought they had $500,000.
Mm-hmm.
And of course, today we know that's not what reality is, right?
Right.
Versus having $500,000. Hey, I've got 2 single-family houses over there, and they're both worth $250,000. I have $500,000 in real estate.
You know what's fascinating is before 2008, how we used to evaluate companies, and I think they still teach us in business school, although it doesn't. No one uses this anymore. Is the value of a company was derived from its surplus of free cash flow, meaning the value of a company was directly related to its profit, how much cash it actually produces. So we can have an argument about, okay, what, and this is actually going on Facebook right now. I'm hearing pre-COVID comps versus post-COVID comps, which has got to be the biggest amount of BS I've ever heard. But let's take their argument for a second. I really don't care what the real estate is worth. I just don't. Because what the real estate is worth is what someone's willing to pay me for it. What I really care about is how much cash flow does that real estate kick off. That's all that really matters. And I can tell you your $250,000 today is worth less than the $250,000 5 years ago. And that's inflation. When you really get into inflation, inflation is just an increase in the monetary supply, meaning more dollars in the system. It's not an increase in prices. People keep thinking it's like, oh, it's an increase in prices. No, the increase in prices in nominal price, that's what an economic term, and nominal price is a result of inflation. And if you think you're not going to see any inflation with $6 trillion getting thrown into the market, and you got another thing coming, brother. I mean, we saw a massive amount of inflation, some of which that occurred in real estate from the last crisis. Now, this is not a real estate crisis. The real estate is, I'll just switch it to this slide, and then I'll close here in a minute. But this is as of March 3rd. The red line is number of new homes built. The green line is median new home price. We can no longer afford to build. We can no longer build affordable housing in the United States anymore. So if you want to get rich, become a landlord. It's not flipping. It's not wholesaling. You want to get rich, become a landlord, or invest in a fund like ours that allows you to participate in equity in our landlord deals. That's how you get rich in this environment, because those two lines, here's what's amazing. Those lines are almost 10 years old. And this chart goes all the way back to 1990. This ain't changing anytime soon. And I'll end it with this, and I'll go through some of the questions. If you think real estate is expensive now, just wait. It is about to get incredibly expensive, because nobody trusts the stock market. Everybody knows that real estate produces cash flow. So if you've got cash flow in real estate, it is about to get incredibly expensive. And let me give you my bold prediction here. And like I said, I'll start taking questions here in a minute. I think this whole shelter in place, all that nonsense, ends by April 3rd. I think there's a greater than 50% chance that the new normal, life ain't going back to normal after this event. The new normal starts after April 3rd, and in most of the country.
Well, the president said Easter.
President said Easter. I think he's saying Easter so he can say, well, we opened up most of the country before April 3rd, the rest of the country by Easter. I don't believe, and I said this from the very beginning, although I didn't put it in any of my emails, but I said it on Facebook Live. We're really not reducing the number of deaths. We're really not going to reduce the number of infected. That's the dirty little secret. If you guys read between the lines on a lot of a lot of the modeling out there, all they're trying to do is to keep the healthcare system from getting overrun. I firmly believe that whether they all happened at once or it happens over a 6-month period, the same number of people are likely going to die, statistically speaking. So really all we're doing is we're just, instead of burning down the forest in an afternoon, we're going to do it over a 6-month period. So for those of you in healthcare, this is just getting started. But the rest of the country will kind of go back to whatever the new normal is. I think, my prediction, greater than 50% chance that this happens somewhere around April 3rd. And then, like you said, President Trump really wants everybody to go to church on Easter Sunday. So
like April 13th is a date that Larry Kudrow and fellows are talking about, right?
Yeah, and I think it's actually going to be before that. I think your hot zones like New York are going to be closed at a minimum till April 3rd, if not later, because it is turning into a little bit of mess out there. But yeah, I'm not buying it. You know, it was funny. I saw a post from a buddy of mine this morning. He said, "Man, this essential employee traffic is pretty thick this morning." I'm like, "Yeah, that's because everybody at the end of the day is essential. You know, employees are an essential industry." So let me go through a couple of questions. I see we got a few here. I don't know why it's doing that. Let's see. don't know why I can't get to your questions. Can I get to the question box? Hold on a second. I will share. Let me do this. There we go. Let me show you this real quick. Just want to share this. Rob took my screen back from me.
Run your share again. I took you off.
Okay. Let me see if I can find it. Let me pull this back up. You know, one of the things I've heard from a lot of people is, hey, Jason, we really want to focus our businesses on refinances. And some of this has to do with the virus, but a lot of this has to do with just the change in mortgage rates. So much for helping Main Street. Amid COVID-19 shutdowns, quarantines, and related financial turmoil, general anxiety has taken the shine off a renaissance in the housing market as mortgage apps crashed 30% week over week. Part of that just has to do with those people were going to be in the market and they're not in the market anymore. So 30% of mortgage apps are down. Home purchase applications dropped 15%, and refis, this is crazy. Refis dropped 34%. So I think the mortgage industry is headed for a world of hurt. That's why I'm not really worried about the non-QM stuff right now, because it's all going to come back. It really is. I don't see that as being an issue. So let's see here. Let me close this. I don't know what my tab is doing here. Let me just close window. All right. Still not working. There it goes. All right. Let me answer some of these questions. Has one needed to pull permits in Houston? How are they being affected? How are rehab contractors being impacted with the Houston stay-at-home order? I can tell you, if you've read this Houston stay-at-home order, residential commercial construction is exempt. Now, I don't know how permits are working. Rob, can you say anything to permits?
It's all done online.
Okay.
It's online. Now, you're not going to get your plan review for your new house ground up done, but you're doing remodeling permits, plumbing permits, AC permits. That's all done online.
All right. Richard asked, hey, what and where is the worst R naught value? All right. So let me explain what the R naught value is. This is where all of the pseudo intellectual wannabe epidemiologists out there are talking about how this thing can't mathematically grow this fast. And I'm like, yes, it can if you understand exponential growth and log normal growth patterns. There's something in the health world, the public health world, called R naught, and it's a variable. It is a non-static variable that changes throughout the infection of a population, and it's called R naught. You can take a look at it. This is where all the wannabe smart guys that will post on Facebook and say, well, there's no way it's going to keep growing at this rate. Well, because they don't know the actual math. The variable they're missing is R naught. So I have heard an R naught as high as 7 and as low as 5, which is still wildly contagious. An R naught value of about 1, well, less than 1 means the virus, the contagion is burning out. 1 means it's kind of a steady rate, and above 1 means it's just wildly contagious. So there are some rumors out there that certain populations, the R naught value is as high as 7. So how you impact the R naught value, in other words, how infectious this thing is, you do 2 things. One is you introduce pharmaceuticals. In other words, in this case would be antivirals or a vaccine. Or the second thing you can do is non-pharmaceutical interventions, NPIs. And that's what we're doing right now by being locked inside. This is considered an NPI, a non-pharmaceutical intervention. So that's where the R naught value is right now. It is all over the place. But I would imagine a place like India, it's got to be in the 7 range. It's going to rip through that country so fast. So that's where we're seeing R naught values. Is going to depend on who you talk to and what they're modeling. But that's why a lot of these junior wannabe epidemiologists and biostatisticians screw up. Just because you can do some math doesn't mean you understand. This is a classic example Just because you could do the math doesn't mean you understand the formula. So a lot of mathematics, especially at a real high level, you have to understand how that formula was built to understand its limitations. It's kind of like saying, well, all math is like all cars. Well, I can jump in my Toyota Tundra today and it's not going to do 200 miles an hour down I-10. Or I can get into a Porsche GT3 RS and I can tell you that damn car will do 200 miles an hour down the freeway. So claiming those two things are the same is kind of like saying, well, all formulas are the same and we can use this as, for this particular model. And you can't. It doesn't make any sense. That's why you're seeing these guys that are like, well, I have a PhD in mathematics and I've worked in Wall Street or I've worked in Silicon Valley for 20 years and this is no way it's this contagious. And it's like, no, you've got no idea what you're talking about. So in any case, that's what the R naught value is. And if you want to go down a rabbit hole of reading, it's fascinating. All right. Charles says, my understanding is that Trump doesn't do shelter in place. He has pushed that on the states. All he does is provide guidance. Correct? That's correct. So here's what I think is so fascinating about this crisis is I'm not going to get into the political response, but let's talk about kind of the political science side. The federal government's job is not to shut down the states. Technically, they can't do that. I mean, they can't announce a state of emergency and all that, but that's stepping all over the sovereign powers of the states. So when Cuomo gets out there and starts popping off about, well, the president should have done this, and the New Jersey governor says the same thing, I'm like, dude, you're the governor. You're the guy that runs the state. Go run it. Like, that's your job. Now, don't get me wrong. Trump has totally screwed up all kinds of stuff in this thing. But that's one thing I think they've gotten right, where it's like, look, man, it's up to the governors. You guys sort it out. So Jeff Hammond says, walk us through the details of your April 3rd prediction. Specifically, for example, will New York City State have sufficient supplies? When will New York City State cases peak? I have no idea when they're going to peak. I will tell you this. I have read enough stuff from the healthcare administrators there. They need 100,000 N95 respirators a day. And I don't know when those cases get, those are hot zones. I don't know what any of that stuff looks like. But for the rest of the country, well, let me put it this way. This is what I think will happen. I think they're going to split the country into zones because that makes sense. They'll split them into different zones and they'll say, hey, you guys up in the Northeast, you're going to be under quarantine for another 2 weeks, 3 weeks, whatever the number is. And then anytime someone travels out of that region, they're going to have to self-quarantine for another week or two. And you're starting to see this pop up in the news media. But the United States...
Hawaii was the first to do it.
Yeah, Hawaii is the first, which makes sense. So I think you're going to get into these regions where, the Midwest is going to have a separate set of quarantine guidelines as, certain popular parts of California and Texas and all that. Where are these things going to
I think the plan is just to then, instead of states hoarding supplies if they don't need it, it's to deploy those supplies to those hot zones, deal with what we need to deal with, lock them down if you have to. I mean, do the whole San Francisco thing. Like, I understand that philosophy is if you just put everyone in their house for 30 days, the virus should run its course. And will it come back? Yes, but then we can just all jumpstart again. And I think what they're looking at, even, I know Trump is getting a lot of pushback from the left on this, but Cuomo got up there today and said, there's got to be a balance.
Yeah.
At the end of the day, you cannot just put everyone in their house for 30 days and think that this country is going to be what it was when you all wake up. And so they're talking about, hey, there's the younger portion of the generation. There's those people like me who I believe I've had the virus and gotten through it. I didn't go for testing because it wasn't a priority, so I didn't get the testing. It's essentially, I'd love to get it. And eventually they'll have a test to see that those who have had it and have gone through, right? Because that's the big thing. That's what we're sort of banking on, is that there's a good 40, 50, 60% of our population who, or of the people that will get it, go through 1 or 2 days of illness, and then just pop right back up, right? And so it's hard to stop the economy when we think that young people and people who've gotten through it are viable. And so they're working on a little balance system, and it's easy to take pot shots at Trump on that, but the reality is, North Dakota, South Dakota, Idaho, some of the bigger cities like in Iowa, they're still running, right?
Yep.
They're still going. The Central Valley is still going in California, still planting food, right? So deal with the hot spots, deal with the emergencies, and go through it. Try and limit the people that would be most susceptible to it. So if you do have respiratory illness, if you are over a certain age, if you are coming out of chemo, or had some sort of respiratory problems in your life, then yeah, stay inside and let's work through this. But there's probably a good 60% of the population who can get back to work, and that's what they're doing. I would much rather see April 23rd than April 3rd. But look, Jason, you got an email the other day. Republic Country Club is done, right?
Yeah, it's done. He's closing doors.
We've been talking about this for 4 to 5 months now. Where we're saying, hey, the problem is that these businesses aren't liquid. They don't have any money. The money they're doing, they're buying back their own stocks or they're working on expansion because they know that at some point, if something big happens, they'll get bailed out. That's what those overnight markets we're seeing injections in, the QE stuff that Jason was talking about in November. And so here it is. Now these businesses don't have a reserve, and all of a sudden they wake up. Guess what? There's a guy who owns something like 1,000 Burger Kings and Pizza Huts and all that stuff. He woke up today saying, I'm not paying my rent.
Yeah.
He was on CNBC. He said, I'm not paying the rent. Can't do it. So he just kicked the problem up the hill.
Well, so I think ultimately where this ends up is you start looking at these hot zones and you go, okay, how does the rest of the country support? Let's back up. They're talking about like this is a war footing, right? Which there is certainly some good analogy there. But when we went into World War II, we didn't shut the damn country down. Everybody got to work. So they've got to open things back up so we can fight this thing where it's hottest. I'll tell you right now, it's a completely fictional book. The movie was terrible, but the book is amazing because it talks about all of this stuff. And if you guys have not read the book to World War Z, I read it every other year. I pick it. It's so good. It talks about how the virus starts in China, talks about how the world gets destroyed, and then how they fight the virus and build back the world. It is so similar to all the stuff that's going on right now. They had the exact same catharsis at some point. It's like you can't hide in your house from the zombie apocalypse. Like at some point, you got to start building back. And somebody said saw that this morning. Don't watch the movie. The movie has nothing to do with the book. Read the book because it talks exactly about the same issue. The zombies are beating on your doors, but at some point you've got to go on offensive. You've got to start rebuilding your industries, and you've got to go out there and fight this thing in earnest. And I think that's what they're starting to realize now. It's like, okay, we've done the 2 or 3 week in-home thing, so we've slowed the virus down because there's less people out in the street. But now we've got to go out and fight this thing. But this idea that we're going to be able to take cases to zero, or we can sit in our house for another 6 months and cases go to zero, that will never be the case. This thing's just going to burn slower, longer. Like it's going to take the people it's going to take. I'm convinced of that. So the reality is at some point, we've got to get the rest of the industry up and running. We got to get retooled so we can give our healthcare workers, we can give our soldiers that are on the front lines, the soldiers that are on the tip of the spear, the body armor they need, the weapons they need to go out and fight this thing. Because it's going to have to get fought. It's not going to happen in a vacuum. So let's see. What are hard money lenders doing? I'm just seeing hard money lenders as business as usual.
A little higher rate,
but that's about it. And truth be told, I think they're kind of using that as an excuse, but who knows what I'm talking about, right? Do you think there's a tipping point in which the economic damage is done becomes years to recover versus weeks, month? If so, what is that tipping point? I don't believe so. I believe the tipping point is this stimulus. I think the economic damage is starting with the passage of this bill and the $4 trillion that the Federal Reserve is going to pass. I think that's the real damage. I don't think being closed for a week is the damage. I think it's printing all this money. It's going to be the damage. Your thoughts on a possible ban on foreclosures and evictions for 1 year? I hear the rumor, but I haven't seen what's actually going to happen. Like, Rob, have you seen what I hear talk about it, but I haven't seen anything codified yet where it says this is the rule. So I don't.
Like I said yesterday, Jason. I think once this relief package gets signed and done, I think within the next 7 days we've got. I think before, I think they're rushing to get that April 1st clarification done. They've got 6 days to do it. What I'm seeing is on the Fannie and Freddie side is if you're and again right now, Catherine is upstairs calling all our institutional lenders right now, find out what's going on, and we'll have better information for you tomorrow. But my understanding is if you have an FHA backed loan, Fannie, Freddie, some of these other ones, and you are a landlord and you have that loan, that they'll give you forgiveness if you're not kicking out your tenants. Meaning they'll either time out for 90 days and add 3 months onto the end of the loan, or take 3 months and spread it out over the next 2 years. You have to have higher payments. They'll do something for you. That's what I'm seeing. As far as evictions, I just don't think logistically you can do them right now. So forget what the law is. It just practically, I don't think that's happening. Again, as Houston starts to see our spike here in the case, the last thing we want to do is put people on the street, right? So what does that mean for us as landlords? That means we're going to bite the bullet one way or another. The folks who are losing are us. You can try and kick this problem up the hill, but it'll eventually always roll back to us, right? I had someone text me yesterday, Jason, and he's like, Robert, I don't know what to do. I've got 6 rentals here, and I've got 2 Airbnbs, and no one's going to pay me. What do I do? Guys, we weren't joking when we talked about the 6-month reserve. Even if you have a 90-day reserve, well, here's the first 30 days. And maybe the next 30 days will look good and you can get through that. We're making all our payments that are required to make April 1st. That is not even an issue for us. Now, May could be different depending on what happens over the next 40 days. Excuse me, over the next 36 days. But
the way I look at this thing is, and either way I model it in my mind, and is everything gets back to normal in 30 days, or this is going to be the zombie apocalypse. Like that, I don't see any middle ground. I don't see mortgage forbearance and no foreclosures for 12 months. I just don't see that. There's no way. There's no way. I mean, in the middle of the worst real estate crash, that was only 18 months, and that was a mess compared to this thing. So I'm just not. Here's the other thing. My dad said it best. He's like, you're telling me that if some waiters and waitresses can't get to the office, can't get to their job, that all of a sudden the economy is going to crash? And I'm like, I don't buy it either. I don't. So,
well, I have some numbers I did this morning, prepared for today. Did a little homework. There are, in Mr. Texas real estate world, there are 7 core employees, including me and you.
Okay.
Then we have 2 sort of 1099 managers, Anthony and Terry.
Okay.
Anthony has another 6 to 8 people who work underneath him dealing with our properties, and Terry has another 24 people underneath him working on our properties. Probably a little bit more, just they come and go. But right now, 24 people working on our properties. So we're over 40 people that we cut direct checks to, like direct 1099 or service invoice. They're getting paid. 40 people right now, and that doesn't include the radio stations, our hard money lenders, Home Depot, all this other our vehicle payments, our insurance payments, all these other companies. So if it just in our little world, if we told everyone, hey, eat it, it's a big problem. And so again, guys, reserves are super important. Keep on doing as much business as you want. Someone posted, "How dare you do an education class?" Well, we're going to do our education class, right? How dare you make deals? What do you mean? I mean, these are deals out there,
And what are we supposed to do? Send all of our employees home?
right? And so
There's
I
work to
think,
do. Let's go do it.
right, that's a problem. And so I think the next 30 to 60 days are going to shake a lot of people out of small businesses and out of real estate and out of other entrepreneurs, and I'm using my air quotes right now, are going to shake them out of that, who shouldn't have been in the first place. Right?
Yeah.
We joked about it the other day. The worst thing you could ever do with give an entrepreneur is money, right? So there are a lot of people who had money, came into this, hey, I'm going to do this now, or hey, I'm now this. I'm now an interior designer. I'm now a stager. I'm now a photographer. I think this will shake a lot of those people out. There will be some pieces to pick up off the ground, right? But if you're a landlord and you have zero reserve, man, that's fundamentals, guys. That's fundamentals. If you're a small business owner, we totally get it. Like I'm trying to put myself in that Burger King guy's point of view, and I probably wouldn't pay my rent either. I'd say, hey man, I got a 5-year or 10-year commercial lease. 1 month isn't going to kill us. So I think there are a lot of businesses, the typical businesses that everyone talks about, the ones that go under without a global pandemic, right? Restaurants fail all the time. I think it just accelerates those sort of bad entrepreneurs or those who don't have enough experience yet, or don't have the right team around them or right enough knowledge. I think we're going to see a lot of that shaked out, which is going to be a commercial real estate problem. So, yeah, I think there's going to be some change here. I don't think we're ever going back to normal for, at least 5 years. The other thing I will say to you, Jason, on this stuff, and I don't like to make it political publicly. We have fun privately. But we have a Republican president and a Republican Senate. And we just swallowed $6 trillion in bailouts and had no problem with it, right?
Oh, of course not.
Right? The biggest problem we had was Pelosi was trying to slip in some sort of, socialist minority breakdown, all that nonsense stuff, right? Which, by the way, Jason, it sounds like she got.
Oh, yeah, she totally got. I didn't understand all this last-minute debating. Like, what are you guys debating about?
Yeah, so I'm looking to see, hey, man, that solar tax credit come back? Am I getting more? Am I getting more money off my Tesla?
I know. I'm going to Google that right now.
Right?
Tax credit.
So what I think will happen to the small businesses or people that were vulnerable and had exposure are gonna disappear. And I think people that had some stronger small businesses or had the ability to shut down quickly and can restart quickly without a massive supply chain problem will do well.
Oh,
I don't think there'll be a lot of laundromats that are going to go out of business or hair salons or any of that stuff. I think that shuts down quickly, pops up quickly. I think restaurants are always so vulnerable. And, bad flippers, bad wholesalers, they'll be able to use this as an excuse why they didn't survive. And even some bad landlords, right? So in our world, we're going to see it. But again, I still believe it's a year event. I think a year, everything's moving kind of where it was, and rates are good, and we're moving out of that stuff.
Yeah, Rob, they took out the tax credits. This came out 2 hours ago. I'm like, you got to be kidding me.
If local foreclosures are shut down, doesn't that order have to come from the commissioner's court instead of HUD, VIBA, environmental and government-backed loans? What do owner finance and conventional loans doing with their current foreclosure? So FHA stuff, I think absolutely there's going to be no foreclosures for 90 days. I think there's going to be a timeout on that. I think if you're a landlord with an FHA loan and you're not evicting people because they're not paying, you're going to get some help on your mortgage that way. I think the commercial loan space is a totally different beast. And that's what I said. I saw a report this morning. I saw a guy getting interviewed. $3 trillion of this marketplace that is essentially exposed because they don't have the government backing for it. So I don't know what happens to commercial real estate. My guess is people are going to try and kick that problem up the hill, and we'll see if it rolls down or not.
Well, let me put it to you this way. Let's take the owner finance scenario. Okay, yeah, I'm an owner finance guy, and I can technically foreclose. You really want to be that guy on the news? I mean, legally, yeah, you can foreclose, but Fannie and Freddie are not going to foreclose. But you, as the owner finance guy, are going to go foreclose on them. I think there's a horrible optics there, and don't think for a second that your borrowers are not going to use that.
Right. I don't think anyone's paying us rent on April 1st, and we'll deal with it.
Yeah.
Right. I have a bigger problem with one of our property managers hasn't paid us yet for March rents. That's irked me a little bit and has some great concern. But yeah, we will. We'll see. Again, I think if you were exposed in your small business or your entrepreneurship, then you're in trouble. If you had some reserves, you're going to do better. Again, I would be on the phone with all my non-QM lenders, all my private lenders, just asking, what's the best course of action here?
Mm-hmm.
Right? And I explained to Catherine is just like in any negotiation, don't say the number first, right?
Yep.
Ask them, hey, what are you offering for April 1st? And if the answer is nothing, then you pay the bill April 1st. If they say, yeah, we're going to go 60-day extension, we'll just, spread it out over the last life of the loan or something like that, then you take it.
So I'm going back and forth with Ryan right now on a Facebook thread, and he said, hey, Kent Clother's on right now, and he's saying there's at least a 20% reduction. And I'm like, where's he getting that data from? Well, there's all these people are going to lose their jobs. And I'm like, well, who's lost their jobs yet? I hear a lot of talk about it. Now, some restaurant people are losing their jobs. Some small businesses are going to be closed. But I'm seeing in that bill, it says, hey, we'll give you guys some bailouts, some interest-free loans if you keep employees. And then I'm hearing
they'll forgive the loan, Jason.
Oh, that's right. It won't be interest only. They'll forgive the loan if you keep those people employed.
If you keep those people. And so one of the things that we've always talked about, guys, is how to set up your business in that you have an active business managing the passive business. And the passive business is just real estate, which pays fees and up to the management company that manage. Now we've got 1, 2, 3, technically 4 management companies and 2 other companies. So we've got 5 active companies that it's I don't know what the matrix is, if it's based on payroll or something else, but we'll take those. We'll take those loans. We'll absolutely will. Right? Now we've gone back to our radio stations. We've asked, hey, are there going to be any rate reductions? And 2 of the 3 said yes. So we got reductions yesterday. That was very fair of them, and I'll remember it. Like, we'll be on Riverside, California for as long as I'm part of Mr. Texas Real Estate, because when the shit hit the fan, that radio station said, yep, we'll help.
Yep. All right, I want to go. You can keep chatting, but I gotta head out here, Rob.
Yeah, I got a pro forma to build. Let me see if there's any more questions on the technical side. Depending on players, I think it's 6 months and 1 year. Do you know? I don't know, Richard. Where all this stuff is just sort of highlights off the speaking points off the news. I've been trying to read as much of that today because I do have 5 active businesses that have employees. 3 of the 5 have payroll set up, but all 5 of the 5 had rent payments. So we're trying to figure some things out ourselves and where we're at. And if you guys find anything, any information, please feel free to post it in the Mr. Texas Real Estate group on Facebook. It's going to be the best way to get a hold of us. Does your training focus on any market? Our training, James, You know, I've flipped and rehabbed in California. I've held condos in Vegas. I have Airbnbs and rentals in the Northeast. I came to Texas because I thought it was a really strong market. So it's not based on that; it's all of it. But again, the structure that we have done is have those LLCs or maybe one LLC for 3 passive properties, and then from there, they pay a fee up to the LLC. And the active LLC is the management of that. You know, keeps all the paperwork, insurance, and payroll all together, and typically has some office space somewhere. So those are the ones that we're looking at. Any other questions? Yeah, we're very hey guys, I know you're hanging out. I will answer all the questions. Can you hold on one second? You know what, Richard? Hold on. I'll get that link for you real quick here, because it is one of the best things that we do is that event. Those 2 days there. Any other questions on other stuff we're doing? I put a long thing out. There's a link for the 2-day event. You know, we're building out pro formas. We're putting our syndications together. We're talking to our syndication attorneys. We're getting construction bids. We're active in everything we can do. I've been quarantined for about 13 days now. Almost done with it here. So I'll be back out there. We're doing some Facebook Lives from some of our projects. We've got to get some draw requests put in over the weekend. So we're sort of business as usual. Great. There's no more questions. There's the link for the event. I'll make sure I send that out. Yeah, Richard, it's a good event. It's $97. So sure, go ahead and ask a technical question. Construction companies are essential services. Yes, Luis. Yes, they're essential services. Oh, we're able to Zoom and share on Facebook because we have whatever business account level that we bought from Zoom allows us to have that feature. All right, guys, thank you very much. Have a great day. Stay safe and be healthy.